Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head financial analyst here, jumping into the charts on this February 7th. So kicking off this wild Powell day was a pretty insane intraday action. Overall, if you look at the daily chart, it doesn't show much volatility, despite you did have a wide range in terms of where the S&P was trading today. So Powell was basically came out and let me just show you the intraday action because we do know that the indices finished up today on the session roughly about 1.31%. Now, if we look at the intraday action, it was so wild to trade because basically the markets were trading in a range. You had a sell off in the morning, a little rally, but came to the high of the range. And then as soon as Powell literally sat in the chair, the markets started ripping. And they often say the first move is the wrong move. And then look what ended up happening, a massive reversal going lower and taking out the lows over here and making a lower low in this overall trend. So now the big thing for the markets is it needs to make a higher high in the trend because it made a lower low in this mini micro trend. It needs to make a higher high and take out this high pivot or this high pivot. It managed to take out this high pivot, but it hasn't taken out this important pivot in the trend. Now, the importance of what transpired and what Powell said, the markets obviously took it more as dovish. At least the stock market did. And let me be clear about this. The stock market and the fixed income credit bond market and the currency market are saying different things at this point in time. Let me be clear. We're seeing a divergence yet again in the stock market. And stock markets took his statements as dovish. My interpretation is basically to sum things up, really nothing has changed. I got the sense higher for longer is the main focus for him. And that's certainly what I think we're going to see from the Fed. And basically, if I turn off the intraday action, the importance of this level here, if I show you this massive reversal, I want to show you the hourly chart on this S&P, the SPY. This hourly reversal after the Powell rally and then it sold off, this is a massive reversal signal. Not only did the reversal happen, it happened on high volume for that hour. You can see that high volume reversal pretty much eclipses this whole trend over here up until you had this wide range green bar to the upside. Now, this reversal in the hourly close is important because you basically have an hourly resistance level, a topping tail, and you can see that on the hourly chart, you basically closed right at that level in line. It was actually a few pennies higher. Now, the importance of this daily close is that if we go back to the intraday, I'm just going to draw a trend line across where that high pivot occurred. And it was basically right on this level here. And if we can observe what transpired, we actually closed right underneath that high pivot. So that shows that this reversal is still technically intact, despite we got a high volume, a very high reversal and float to the upside on lighter volume. Now, as long as we don't close on an hourly close tomorrow above this pivot, this still technically means we can trade in this range. Basically, this low, this high to this low is our new trading range that has been established if this reversal holds true. Now, what transpired in the aftermarket hours, if we actually turn on the extra hours, you can see we actually had a harder dump. There were mixed earnings. Chipotle fell. Fortinet ended up rallying, but a lot of mixed earnings. Net, they were negative because you saw a lot of the mega caps actually have maybe profit taking or some extra extended hours trading, but there was some profit and selling that occurred late in the session that dropped the S&P actually a whole extra almost a whole dollar, quarter percentage basis points. So it's a pretty big drop for the after hours. Now, it's going to be interesting to see how things shape up because you are trading still in this resistance. So as long as you don't get that hourly close above this level, you're going to be trading, you can potentially ping pong in this new range from this high to this low. So these are going to be the two big ranges that I'm watching for. As soon as we get a confirmed break out of each side of the range, that is going to give you the next directional trend move. Now, if we look on the larger term time frame for the SPY, obviously it was a bullish move, but you can still see we've had a tremendous move from the low to the high without any meaningful consolidation. You did get that little dip today to the pullback of your initial support here, and you can see you've bounced. But needless to say, I think we have to keep in mind that with the State of the Union address tonight, Biden, perhaps there's market makers that want to see Biden and the public officials look good as they head into the State of the Union address. My overall thesis really hasn't changed for this market, but you can clearly see you're at resistance, major pivot, high volume zone. Also with this downsloping trend line connecting to a major pivot and major pivot. And the thing about the SPY is you did fill this technical gap to the upside. So that's technically it has been fulfilled. And I think that we're still seeing major resistance in this area. Now, the importance of what we can also analyze from the volume. Volume is starting to uptick. Notice how the last few sessions are increasing above the volume moving average. So whenever we start to see this moving average and volume start to uptick and roll over, it means there's likely distribution occurring or there's going to be a major directional trend change. And we've seen it numerous times, usually at the bottoms and the tops. You can see more so that in this period down here, you had a little bit of a influx of volume and you started seeing a consolidation and then a distribution breakdown. So perhaps we could be seeing distribution occurring, or maybe there's just a lot of buyers buying this back up. One way or another, I do think in the next week, we'll be able to tell whether or not we can close above this resistance on a daily and weekly close, or if we're going to be trading under it. But so far, what we want to see for bullish consolidation on the SPY is to just start making a basing formation, basically between this 408 level and higher. That's kind of the basing formation. If you look at the Qs are still also trading at resistance, had an impeccable move. Now, the divergence that I've been talking about specifically looks to be in the yield market, the interest rate market. Looking at the 10-year yield here, it's potentially on watch for a breakout out of this wedge pattern, this bullish pennant formation. You can see your high pivot to your high pivot to your high pivot. You just peaked above that today. And even with the sell-off, this is when Powell sat down in the chair, yields collapsed, dollar collapsed. But look at what the yield market did. It actually ended up closing above the previous Powell collapse, which shows massive bullishness in the yield market, extreme bearishness in the bond market. And that's what I mean by stocks and bonds diverging. Interest rates are saying something else, bond market's saying something else, while stocks are continuing to rally in the face of higher interest rates. Even if we look at the 2-year yield, the 2-year yield intraday had a massive collapse. You can see this was Powell here, boom, and then it rallied, actually got a 10-minute close above that previous pivot high, but you couldn't hold on. On a daily chart, this is still extremely bullish because you're still on watch for a potential confirmed breakout. And being the fact that you had a big fall and then you've still managed to rally up to the highs shows that the yield market didn't really give up much ground today, even though the stocks think it's still traded all the way down there. And this is the real reason stocks rallied today, was because this weakness in this yield collapse and also this weakness in the dollar collapse. And the dollar, yes, it didn't recapture as much as the yields, but the interest rate really didn't give up anything, and the stocks are taking a lot of this as potentially dovishness. And that's certainly not what I'm seeing in the bond market. Okay, now that we've covered the bonds, yields, dollar, as well as the S&P, let's take a look at natural gas. Obviously, natural gas has been performing exceptionally well in the face of this extreme volatility. Sorry, I can't really type right now. Natural gas, it's been a long day, crazy volatility. Let's see natural gas. Let me just pull up the other chart for us for a second on capital. Just bear with me. So natural gas is performing exceptionally well. We identified the range. Let's just go to a long-term frame for a quick second here. The weekly chart, looking at the log view here. So natural gas has clearly had a nice bounce. You can see on the weekly chart, we're trading nicely off of the lows. Let me just minimize this volume so we can see things clearly here. But what a move on natural gas, closing the session up over 4%. But like I said, this move has not been easy. If you take a look at the hourly chart, what I've been watching for is a potential breakout. You had this initial downsloping trend line, which you peaked above yesterday, had a full consolidation, almost a failed breakdown, boom, a retrace, a hit, a bottoming tail off of that major support level was the buy signal to trade, and look at that move off of that level, boom. And now why are we stopping here with the topping tail? Because you ran into your first major pivot. Do I think natural gas is done? No, I do not. But what we want to see is it consolidate in a range now. If natural gas can actually start to build a base off of this range, this 257 range coinciding with this pivot, then it could be primed to push even higher, and I think to this 285. Now, there's a lot of shorts still in natural gas. So if we get some momentum in this play, we could see natural gas on fire. No pun intended there. But beautiful move on the daily. I still think we have minimum upside to this 284 level. And then if the short squeeze commences, we could see an even bigger retrace, maybe to this 349 level. But we're going to have to take it day by day because this is certainly also wild price action in natural gas. If you look at the intraday 10-minute, look at this series of higher lows though and higher highs. So you have a higher high here, higher high, higher low, higher low, higher low, higher low. That's an uptrend. So this is really the channel and uptrend we want to keep watch of. Basically, is these pivots. You can see you have a pivot over here, pivot, pivot. So that's the trend that we're basically chopping in and trading in for the time being on natural gas. But pretty powerful move. If we look at UNG, very similar, beautiful UNG move. We still had our max downside down there, but we obviously are long UNG. And that ad that we added down here yesterday was impeccable ad. Truly amazing addition to our UNG position there. But you can clearly see that UNG is still oversold. RSI buy signals are slowly starting to tick up, so maybe the algorithms get on board in the near term to potentially help buy this natural gas product back up. And what I'm seeing is as stocks are literally trading into resistance and into extension, I'm seeing basically a lot of potential rotation of capital into the beaten down assets, which is like what natural gas is. Oil is interesting because oil had a massive move today. Basically, let me just take a look at the US oil chart here. US oil chart recapturing this level here. If it can confirm above this level, then this could be a failed breakdown in oil. And my thesis in the short term would change to the bullish side. At least to this next 82 level, we could see oil if it confirms and closes above this previous high today. But the fact that oil finished near the highs of the session is really impressive. Basically, if I adjust this trend line, you can see you're still technically trading under resistance. So you really have to get above this level and above this reversal hammer candle in session. But oil's just trading in a range. You could be dropping in this little bit of a range for a couple more weeks until a more decisive move comes into oil. If we take a look at gold, one of the reasons I'm skeptical of this market rally, looking at the hourly chart on gold, gold tried breaking out on that weak dollar and weak yield collapse and then just gave it all up. And gold's putting in nasty bearish consolidation. So we have to keep in mind that gold is signaling something. Gold often led the S&P up during this whole market rally. I mean, if we actually just throw up the SPY and do a little bit of an overlay of where it happened, gold was the first one to move up. If you see this rally in gold, which basically topped over here, it had a sharper move to the upside before the S&P. The S&P basically topped here, had a big sell-off as gold started to rally. And now you can see that S&P is really caught up to gold, but gold's starting to sell off. So let's just be mindful that often the leading assets that start rallies and continue rallies, when they start giving us sell signals and stocks are diverging from major safety asset classes, that could be detrimental for stocks in the underlying short term. So I'm just kind of looking at a lot of cross-sector signals and looking at a multi-array of assets, and I'm starting to see potentially the market is on borrowed time here. Obviously, technology is keeping this market up, strength in Apple, Microsoft, Google today, but we're really starting to see some negative divergences, and it's certainly something we have to be mindful of. In terms of next levels on the Qs, you could potentially start to attack this wide range red bar high pivot if you are to confirm and get above this downsloping trend line. That's your next big resistance, but we still have to really see that break through. Let's touch base on Bitcoin quickly because Bitcoin did get a nice pop. BTC USD had that 5 days of sell-off. Naturally, it is expecting to get an oversold bounce off of support. The big level on Bitcoin that I'm seeing intraday is that we did have a bearish engulfing candle on the 30-minute. This is the level to watch, this 23.35 level. If you can get above that, Bitcoin may have more upside, probably about to this high pivot of 23.68 in the short term. If you can't get above that, then you're likely going to test the low range. So that's the range. This bearish engulfing candle is still resistance. You have not technically overcome that candle, and that's a mean, nasty bearish engulfing that I do think acts as major resistance on Bitcoin. And I do think that we could see more downside in the near term creep into the crypto market. Let's take a look at the total crypto market cap just to give us an indication of what's transpiring. You can see in terms of total crypto market cap, still trading at this beautiful parallel channel of resistance. And then this white trend line is also that COVID trend line connecting from your COVID low. So you haven't been able to really confirm above that. You still have massive distribution and wicks occurring. So I'd be careful about this potential wedge pattern, upsloping wedge pattern breaking over. Typically, upsloping wedge patterns can have initial, fake out breakouts happen, but they typically, in most scenarios, roll over. And especially since you are still extended, we could be on borrowed time for crypto in the short term. In terms of a support where you could buy crypto for a bounce, basically, if you were to lose this pivot, you should have some decent support trading in and around this upsloping trend line here, which would probably coincide with this previous pivot zone down here. So if crypto were to fall straight down into these two levels in here, this basically this 900 billion to 920 billion, would probably be on Bitcoin around probably the 21,000 level. That would be your next support to buy on crypto for a potential little day trade or scalp trade. Other than that, I'm going to end this analysis here. I'm just going to urge investors that stocks are into resistance. You're starting to see a lot of distribution occur, and you're starting to see the divergence from the yield market. Really, the thing that I'm watching most is going to be basically the 2-year yield and the 10-year yield. Those two yields are going to tell me everything, especially the US 10-year yield. The US 10-year yield is going to affect more of the real estate market. So if this continues to peak up and confirm a breakout tomorrow, that's going to be detrimental. And this is the trend line I'm watching on yields. This main trend connecting your pivot to this breakdown point over here. We're now peaking above that level, and we actually peaked above it yesterday and confirmed a close above that. So that could be extremely bearish for bonds, which typically means stocks follow the downside trend. Other than that, it was a pretty impressive day. We did close a few trades. We took a couple new ones. We had FTNT pop in the after hours all the way up to, let me just turn on my after hours prints. Basically, it popped all the way up to this 63.58. We took a short level at $63.04, so we're nicely in the money on that trade already. Often tomorrow you could see a little bit of a retrace back to the upside, but it really depends on what the market's going to do tomorrow. On that note, I'm going to bid you farewell. To all our natural gas bulls out there, I'm curious to see how the price action transpires tomorrow, because it should be a pretty wild session if we get some follow through. Often these bottom of the basement moves can have extreme power and force that rip a lot of people's faces off in an unexpected move to the upside. So we are starting to see a volume uptick. We want to see the volume in natural gas really start to climb to the upside here. And that would likely mean that we've put in a near-term definitive low. And I would love to see a potential short squeeze in natural gas. Obviously, we are long, so that would definitely favor us in a great way. On that note, I'm going to bid you farewell. We'll see you on the charts tomorrow in the live day trading room. Stay tuned. We'll be on the air around 9:15, 9 a.m. for a little bit of pre-market trade setup talk. And on that note, take care, and we'll see you later.